So I recently made a video on the top 5 dividend ETFs that you could use to replace your full-time income. But that got me to wondering, how big does your portfolio need to be to generate 5 and 6 figures per year in completely passive income? And I did what any reasonable person would do and started researching some of the content that exists on this topic. And let me say that what I found was, let's just say it was a little questionable. So I decided I would do my best to give you a simple and unbiased answer on how much money you need to completely live off dividends. Spoiler alert, it's more than you might think, but it's also not as hard to reach as you might think. By the way, my name is Brian. I'm a former investment banker with a Master of Science in Finance, and my goal is to help you master the market. And before we start doing any dividend math, it's important that you know what dividends are and what they are not. Dividends are just one option for companies to return cash to you, the investor. Because believe it or not, most people who invest their money into companies would like to get that money back at least someday. One option could be to sell a chunk of your shares, but that sounds like a little bit of a hassle, and you might want to just get a little bit of your money out and leave the rest to benefit from compound interest. So to solve for this, some companies pay out cash in the form of dividends at a rate of around 1 to 5% per year. And the hope is that these investors will be happy with those dividend payments and will keep their money invested in the company for a longer period of time. In fact, this is also a likely explanation of why dividend stocks are typically less volatile than companies that don't pay dividends. Dividends are not, however, some sort of magical strategy that will help you beat the market over the long term. And the explanation here is very simple. All the company that pays dividends is doing is moving cash from their bank account into your bank account. As Ben Felix puts it, who is a fantastic finance creator who you should absolutely check out, this is equivalent to moving money from your right pocket to your left pocket. Now that we're on the same page about dividends, let's talk about how much of these you need to get your portfolio to replace your salary. And for this analysis, I'm going to assume that you want to replace the median household income here in the US, which as of right now is currently sitting at $80,610. Your goal may be different, of course. For example, you might want 6 figures of dividend income. And that's okay because I'm going to give you a special formula that you can use to answer this question for yourself, no matter what your dividend income goal is. And I promise it's so easy that you can do it from your phone right now. Step 1 is to enter your desired income, so I'm going to put $80,610. Step 2 is a little bit more complicated, and for this one, we're going to hit the divide button. And for step 3, we're going to enter your dividend yield of your investment as a decimal. For this example, I'm looking at an ETF that pays 3.5%, so in decimal form, that is 0.035. And according to this math, I need just over $2.3 million. Now that number might have been a little bit bigger than you were expecting, and it might have been a little bit discouraging to hear, but if you stick around, I'll give you 2 reasons why this goal is easier to achieve than you might think. The first reason is that it is absolutely possible to get a dividend yield higher than 3.5%. One of my favorite dividend paying stocks, for example, is Gladstone Commercial, ticker GOOD, and their dividend yield right now is around 7.5%. And at that level of dividend yield, you would now only need $1,074,800 to replace a median household income, which is already a lot lower than the $2.3 million that we just looked at a minute ago. But let's say you want a well-diversified portfolio with more than just one stock, good choice by the way, and you're therefore stuck with needing a $2.3 million portfolio to hit your passive income goals. Well, let's take a look at what it would take to get there. Assuming you're starting from zero and you want to get to $2.3 million in 40 years, if you're earning 10% per year in the stock market, then you would only need to save $4,724 per year, which works out to about $393 per month. If you want to get there faster, say in 30 years, then the amount you need to invest jumps to about $12,711 or just over $1,000 per month, which in my opinion should be doable for most people. But let's say you want to accomplish this in just 20 years, then in that case, you would need to invest about $3,000 per month, which I think starts to push the boundaries of what's possible for most people watching this video. Before I tell you my thoughts on all this though, there are a couple of assumptions I'm making here that I see a lot of other creators gloss over, and I want to make sure that you're aware of them. Number one is that we're using a 10% return here, and while the US stock market has returned 10% on average for quite some time now, there's no guarantee that it will do so in the future. Just to give you an example of how big of an impact this assumption has on this analysis, if I change the interest rate from 10% to 7% over a 40-year period, you would need to increase your yearly contributions from $4,724 to $10,767, close to a 3 times increase. And with everything as overvalued as it is right now, a 7% return over the next 40 years is absolutely not out of the question. Assumption number 2, though, has a bit more of a silver lining to it, and that's that we're assuming you're starting with $0 when in reality you may already have a little bit of a nest egg saved up. For example, if you're starting with $100,000 and contributing $1,000 per month, you would reach $2.3 million in just over 24 years instead of 30 years in our previous example, or about 20% faster. Assumption number 3 also has a silver lining, and that's that we're assuming that you never ever increase the amount of money that you invest. In reality, you'll likely average a 2 to 3% increase in your income every year, or potentially more if you're able to get promotions or job hop for a higher salary. If we take the same example and increase your $1,000 per month contributions by 3% per year, then that will shave another 2 years off of that 30-year timeline. And if we combine these and say you're starting with a $100,000 balance and increase contributions by 3% per year, then you would reach a $2.3 million account balance in just 23 years. While that might sound like a long time, that means that if you're in your 20s and you're watching this, then you could have a portfolio that supplements your full-time income by your early 40s. And on the other hand, if you're in your 40s and you're watching this and you haven't gotten serious about investing yet, there is still a clear path for you to reach financial freedom and retire comfortably by your early 60s, as long as you're willing to save and invest aggressively and consistently. If you've made it this far in the video, you've seen me unpack a lot of numbers and information, so let's quickly pack all that back up. To answer the question of how much money you need to replace a full-time income, the answer is about $2.3 million. While that might sound like a big number, we've shown multiple examples of how you can reach that goal starting from scratch in about 20 to 30 years, depending on how aggressively you save and invest. And arguably, the most important factors that determine how fast you get to that $2.3 million mark are how quickly you can get to $100,000, as well as making sure that you earn a good return on your investments. If you want to learn about either of those factors in more detail, you can check out those videos here on the screen now.